well if we sorry, I'm sort of still in the historical mode. 2008 seemed to be
Sure.
the big shift where it was like, yeah, this is,
That was a big
as you
one.
said, that they bailed out the banks. Yeah.
Yeah, that was, the country. We'd be in a much better position than we are today. Right now, we're in a very bad position because we wasted that $8 trillion.
Yeah, agreed. And I think the interest
Officials are loath to talk about gold because they know it doesn't help their case. So the fact that he had to say something indicates to me that he's getting questions about it, right? So that's point one. Point two, he parroted.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.
Exchange standard in 71, because that's when inflation really started to take off and became a serious problem. And, even after that, then there were various additional steps, most recent being, quantitative easing and 0% interest rates and, bank bailouts and so on and so forth that have just basically changed the financial rules of the game in a way that is extremely unfair to anyone who doesn't know how to play that game, which is to say average citizens get screwed by inflation, and the financial people and government people who know how to game the system, they get wealthier. And so, America was founded on the principle that, kind of equal opportunity for all, and we're not really living up to that in the financial sphere. So that's kind of the thesis.
And it seems like, if we look back, it's sort of the Fed, it's the Greenspan put, it's all these, seems to be all these different steps that have evolved since the 70s, where, Bretton Woods sort of was abolished. And it just seems to have slowly crawled, as you say, and then
it just kept getting worse and worse. And they modernized the Commodities Act. They got rid of Glass-Steagall in a completely different way, right? So, and obviously Bitcoin is a big part of that. And so I've explained in great detail what Bitcoin is, how it works, what people need to consider, and why it really is the best way to protect themselves and protect yourself. And you're not only protecting yourself financially, you're also making a vote for a fairer system. So that's kind of the background.
Yeah, okay, yeah, makes a lot of sense. And if I look back at it as well, if we sorry, I'm sort of still in the historical mode. 2008 seemed to be the big shift where it was like, yeah, this is,
that was a big
as
one.
you said, that they bailed out the banks. Yeah.
Yeah, that was, the title of the book is The Big Print, and I believe that we have another big print in our future, really almost just because of mathematics. I mean, the way they're growing the debt, you have to print the underlying base money or else the thing collapses. But we've actually already had two big prints. I mean, more notable ones. We've had more before this, but the first one was really 2008, and that was a big one. The Fed balance sheet went up 3 or 4x, and almost 4x, and size of the GDP. It tends to lead to very high inflation or a currency event, as in hyperinflation or a reset. And so, and it's like 11 cases in the last 100 years. It was like 11 out of 11 cases it happened. And by the way, we're at about 125% debt to GDP. So it's really a problem. And it, I mean, can we kick the can for a few more years? Sure, of course we can. But can we kick it for 10 or 15 more years? I don't think so. There's another chart in the book that shows just the recent debt growth, which is rather stunning. In the last 4 years, we added 11 trillion to the outstanding federal debt of the United States. It took us 220 years to create the first 11 trillion. So, the pace is accelerating. I mean, another thing that's not in the book, because it came out after the book was written, is that the U.S. federal deficit for the first two months of fiscal 2025 was up 64% year over year compared to 2024. So, those people who think it's going to get better, that's certainly not what's happening. Based on the country, we'd be in a much better position than we are today. Right now, we're in a very bad position because we wasted that $8 trillion.
Yeah, agreed. And I think the interest actually is it's not. So I think from that book I remember, it's not actually the debt; it's the interest. And then
well, that's exactly right.
Yeah.
That's exactly right. I mean, you're bringing me to kind of the point of the debt doom loop. So the problem is when you have a government that's running deficits and they have a large burden of debt, it's one thing when the interest rates are low, they can, they're paying a small amount of interest and maybe that doesn't blow out the deficit. But when Jay Powell started to raise rates post in 2022, post the COVID, money printing, he rapidly raised them very quickly raised them up into the fives. And what that did was it took the U.S. federal government's interest expense and took it from 400 billion to a run rate right now between 1.3 and 1.4 trillion. So, and it ended up, a lot of people ended up selling their bonds to the government, and the Fed balance sheet grew enormously during that time frame. But then in that case, what saved them was when the war was over, the demographics were pretty good. So all those guys came back and started, getting married, having babies, buying houses, buying cars, and we grew our way out of that problem because we were a young, still relatively young industrial economy, and we needed a lot of stuff. And so, GDP grew rapidly and the debt to GDP came down. And then they were able to let the interest rate market go free again. They didn't have to, use yield curve control after a certain period of time. But yes, I could see a situation where in this time around, the government is forced into doing some form of yield curve control because they just can't have higher rates. If they do, things are going to break.
Yeah, but I guess if the US has to do that, then you're a bit concerned about the rest of it.
Officials are loath to talk about gold because they know it doesn't help their case. So the fact that he had to say something indicates to me that he's getting questions about it, right? So that's point one. Point two, he parroted what has always been the line where I'm sure the gold is there. I'm not worried about it, which of course, he's an official of the government. He kind of has to say that. But, and then he went further and he even said, and any senator is welcome to come take a look at it. Well, I hope somebody takes him up on that. And it'll be somewhat tough to find, somebody who can go down and do it. And probably more importantly, the tougher thing is actually the gold may be there, but what you don't know is what's happened in the Exchange Stabilization Fund, what's happened in the Federal Reserve's dealings with. The Federal Reserve is authorized to deal with central banks, large entities all over the world. And what you don't know is how many times over has the gold been sold? How many people think they own gold but don't? I kind of compare it to a game of musical chairs where those of us who are in the gold community have watched this for years as they're making record buys. So it feels to me like there's a knowledge and a trend coming where, sound money assets, gold, which is analog sound money, and Bitcoin, which is digital sound money, are going to perform pretty well. I know that on Bloomberg, the analysts are saying that the $2,900 gold price, they're projecting a year out, it's 22, that this is kind of a blip and it'll get solved and go back down. And I'm like, what are you guys thinking? I think in a year out, it's going to be 4. I think in 3, 4, 5 years out, it could be 10,000 an ounce. It's, there's a lot of demand behind this. And when a gold bull market gets going, it tends to really multiply in value. So it's similar to Bitcoin in that way. So.
Yeah, do you see there being sort of divided, I guess, globally? Because I've heard an argument that maybe it's because people are worried about tariffs, so they're trying to sort of get there.
That's certainly that's a real fair. That's fair, and that's when Bitcoin got invented, they created triple entry accounting. A debit and a credit, but also a third entry, which is somebody can look at it. The ability to see it from outside the system. You can go and see the address and see that the money's really there, which is a very powerful idea.
Yeah, definitely. And I guess, do you see sovereign? Do you think sovereigns have bought Bitcoin? Because I guess I don't know if there's a.
I do. Well, we know El Salvador did. We know Bhutan has. We know, the U.S. hopefully hasn't sold the 200,000 coins they have, and they're talking about a strategic crypto reserve. I was in the Middle East in December, and we subsequently learned that what I heard as a rumor there is in fact true, which is that the United Arab Emirates has been hodling Bitcoin. So has Oman, so have the Saudis. From what I hear coming out of Putin, and he's talked positively about it, let it die. That just doesn't serve their interest. It doesn't serve anyone's interest. And so what the government always kind of figures out, it's easier to explain away the inflation than it is to explain away an economic collapse, like the Depression. So I think there's a very high probability we will have serious inflation in our future.
And you don't see any way that maybe they could, Doge comes in, it's very successful, it sort of almost resets the, I guess the current system, maybe AI has this large amount of growth that sort of helps us grow out of the
Yeah, I mean, yeah, look, I mean, another thing, right? But you could see stuff was coming. I mean, you knew there would be new technologies coming. That this internet thing had just changed the rules of the game in a big way. But it kind of outran the excitement, after a week or so. And you got to continually keep it interesting, or else you lose your audience.
Yeah, definitely. And I think that's the thing. It was sort of slowly, then quickly, all at once. But if we, could this also just create another similar system where the Bitcoiners are, extremely well off, sort of these overlords almost, and then the rest of the people who didn't jump on the bandwagon sort of struggle? Do you see the risk of that?
See, I don't think so. I mean, yes, obviously people who own Bitcoin are going to be better off, but they're going to sell. Some are going to sell their Bitcoin. Bitcoin's going to get more widely distributed. And your income, that family may not have the income to do it. And that's kind of the United States. I mean, having the world reserve currency, we could just keep taking out credit cards and run up debt and people would pay for it. But now people are kind of moving away from the dollar. They're starting to choose gold as an alternative. The U.S. bond market is not, I mean, a lot of the U.S. bond market has shifted towards the short term end of the curve. And the reason that's rumored that that's occurring is that, foreigners and others don't want to buy 10-year government bonds because they recognize the government's got to print money and they're going to get debased. If you look at the game, the way it's constructed right now, the biggest sucker at the table is anyone who would buy a long-term bond. Because while they may be getting 5% interest, what they don't realize is just how debased the currency will become in the next 10 years or 15 years. It's going to be terrible. And so they won't get their money back on a real basis.
Yeah, and that does sound similar to sort of post-war, and that's, I think,